All right. I want to talk a little about, not about Bitcoin. I have Bitcoin up here. I want to talk a little bit about gold, and just kind of not my opinions on it or anything like that. I kind of just want to talk about how I'm kind of riding that trend and modeling that trade. So let's go to gold and not Bitcoin. So I think, at least for me right now, the clarity on gold is on the quarterly time frame and on the monthly time frame. And why do I say that? Let me go to it like a daily real quick here on the left pane. And if you just look at this, it's like it's such a noisy daily chart, right? Like I can't really do a lot of forecasting on that. And then even the weekly, it's just not enough. The clarity really starts to manifest itself on the monthly, and so I'm actually doing a quarterly on the left and a monthly on the right. And this is my primary view on gold as it's kind of making this move here. And I think it explains the price action better than anything else I've witnessed so far. So let's get into that. So how I have this modeled, I start with uh, a thesis here that this is a wave one and a wave two. And again, I'm not an Elliott wave expert. I've only been doing it for a couple of years, and but I almost always try to apply it to my trades, even though my primary school is more of a momentum approach. So I have this set up as a 1, 2, 3, 4, 5, starting with the late '60s or 1970 up through 80, and I'm calling that a wave one. And then I'm calling this an ABC wave two, and that with a bottom right around 2000, 2001. And then we're in a three, and I don't think the three is done. Um, Maybe not even close to done, but we'll get into that. So this is kind of the quarterly view I have here, and then so with that thesis kind of established, then I'm looking to the shorter time frames to kind of feed into that to kind of confirm that. So I'm using the monthly chart here, and I'm going to make this RSI just a little smaller for now. So we're just zoomed in a little bit here. So just this was 2020, and then traded sideways for a little while, and then the move rocketing out here around 24, starting around 24. So how do I use this to kind of confirm this? Well, my primary approach has been to just use the RSI here. So on the monthly chart right now, the RSI is through the roof here. So this is confirming price. So what does that mean? If you're familiar with divergence, you probably already know this. If you haven't really done a lot with divergence, you often see some type of top set in a time frame on a divergent signal, which is when price makes a higher high, but momentum can't make a higher high. So you have price making a higher high and momentum making a lower high. So this is in the absence of that, then I have to assume after the next pullback and we take a shot at the next highs. Well, because we haven't put in any, because we're fully confirmed here, and we don't have a divergence, I have to assume it's going to take out the high, and then maybe we'll do a divergence after that, right? So as long as these keep confirming each other, I have to assume it's gonna keep going up. And I think right now this confirmation feeds beautifully into this expectation that this is going to go higher. So let's go back over here and look at this quarterly chart here. So I drew this Fibonacci extension up as though this is a 1 and this is a 2. And so I don't draw these boxes here, right? These are derived from the extension itself, and it just so happens, this extension kind of confirms my suspicion because price came up, and it's back in 2012 and started trading sideways at the 618 and then sold off for a little over a decade, came back up around 2020, and again price action at the 618. So price is respecting this extension that's drawn off price action from the 60s, 80s, right through 2000. And then even more confirmation is after it consolidated at this 618, it's been shooting through towards this 1.0 without really any resistance at all. So right now, this is confirming my wave thesis, and then this is confirming, that this can still go higher. So it's logically, I think this makes a lot of sense. Emotionally, it can be a little tough to deal with because this 1.0 Fibonacci extension is over $6,000, which sounds crazy. But not unprecedented, right? If you're back here in 1972, I'm just picking an arbitrary spot. So it was $38 where I have my cursor right here, and then it just shot up to uh, let's just say like 850. Let's just say 850. That's a huge move. That's a way huger move than we have seen. This move from roughly 2,000 to almost 4,000 now. So this isn't unprecedented, but it does emotionally sound crazy that maybe $6,000, $6,500's on the table. And you can kind of even take that a step further. Like if this is a wave three, you really don't expect a wave three to stop at a one. Conservatively, I usually look for a 1.236. I think it depends on who you ask or kind of the school of Elliott Wave. I know there's a few different takes out there. With like Glenn Neely and then the I forget their names, but the guys that do the popular, I think most widely accepted Elliott Wave book. They might be looking for 1.618 or what have you. But anyway, just for now, let's just focus on this one. I don't necessarily, in a normal trade, I wouldn't expect it to stop at one. I really would expect it to keep going, but I'm just trying to keep things conservative as I follow this trend. So kind of to summarize what I said, I drew this Fibonacci extension from starting in the 60s, and then price has respected the extension targets, which kind of confirms my wave suspicions. And then these converging momentum and price signals are sort of feeding this thesis that this is going to go higher. And so if we go over here on the monthly, I already mentioned that we're making a higher high in price, we're making a higher high in momentum. Looks great. We can maybe zoom in and see, are we even diverging on the weekly yet? And no, we're fully confirmed on the weekly. And if we go to the daily, rough Friday, not that bad really, but rough Friday, but we still are pretty much confirmed on the daily. So it's pretty wild, but yeah, no red flags. That's not to say we're not going to have some pretty big swings, but a big swing on like a daily or a weekly chart might not barely manifest itself on this monthly chart or this quarterly chart. So I think things are looking pretty good. You could kind of contrast this with like Bitcoin, where it's starting to put in some lower peaks on the monthly here. I'm curious, and I don't know this answer. I'm curious if this is the peak on the RSI on Bitcoin, or maybe it will come up and maybe tag a trend line or just put something in lower than this. I don't know. My base case with a MACD this extended off the zero line is that it will come in. It wouldn't be crazy to me to see Bitcoin come down to 60,000, something like that. I think that would look pretty normal looking at this chart. But I mean, who knows, right? Who knows? It is interesting how little volume we've had here, but I don't want to make this about Bitcoin. I just wanted to use Bitcoin to kind of illustrate the differences in the chart. I don't have any issues with Bitcoin. I'm not like a gold guy that just can't stand cryptocurrencies or anything like that. I think there's merit in both. I will say, in the crypto space, I find Bitcoin one of the least interesting ones because it's just a weird way to store value, in my opinion. I'm more into maybe the financial rail aspects of cryptocurrencies if that becomes a thing. I think it will. Maybe I'm wrong. And that won't hurt my feelings if I'm wrong, but I think there's probably going to be something there. Especially, it's already, it's crazy to talk about that stuff a few years ago, but then we have talks of weird, like, national stockpiles of this stuff. So who knows? Who knows? I think that there is going to be something there, but I don't necessarily know what that looks like, and I don't need to know. So I think I've covered everything I wanted to on gold. It's probably something I missed, but yeah, that's how I'm following this trade. It's not financial advice. Definitely you do you, and the way you follow these trends, it might depend on your entry, right? So my entry was uh, let's just say between 2020 and 2022. I definitely went underwater. I don't want to act like I nailed this move here, and it doesn't look like this was very long, but this was a couple of years. At the time when I was entering gold, I was making purchases. If I can find it here, I went too far back. these are every one of these candles is a week. So I bet you I bought some right off the high, and I know I went underwater because I was very stressed out. And I was new to trading, and it was pretty good sized position. Probably too big for someone as new to trading as I was, but I sat through it, and I've definitely taken some off, and that does not bother me. When you're really stressed out, new to trading, I know I took some off at 25 and 3. I still have the majority of the position, but just that's how I'm riding it based on my entry. Now, if you enter late, like if you got a late entry, you might have to be a little more kind of cute with your profit taking and all that, and because there's a good chance you get a pullback and go a little underwater. Maybe not. I don't know. I don't know what'll happen, but it really depends on your entry. But right now, based on where I got in, I'm feeling pretty comfortable, and guys that were buying back in 2000 are feeling extremely comfortable right now, right? So that's how I have gold modeled up, and I hope this helps someone. Not financial advice. I appreciate you watching. I hope you have a great day.